Hello, this is the price action for yesterday, the EURUSD 3-minute chart. We had a bull spike and a range. Let's go up to the 15-minute chart to see how this formed. So the day prior in the US session, we had this huge sell-off that overshot the channel line, which created this range. So coming into yesterday, we had trading range, and during the day, we saw this channel form. And it had a break, and it retested the low. And then, of course, the first attempt to break out of this range failed, and it created this spike up. It's also an overshoot, so there's even more chance of this spiking. So we got a spike, and we headed up to the other side of the channel. And of course, we're in a bigger pattern here. So, when we go down to our 3-minute chart, it takes a lot of bars to break out of bigger patterns usually. So we end up getting this pullback here. You don't know whether it's going to fail here and head back down to the other side channel, or we're going to go up and hit the other side of this bigger purple channel that we're in. So we're now currently in this bigger purple channel. And yeah, it goes back to the EMA, and this is very strong. It's above the 50%, and it just gets bought, and there's a lot of bulls there, and we head on up to the other side of the channel, and then we head down in the US session. We didn't get to play all that. We just got to play the pullback and the spike, which is virtually just like a spike in range. So we'll just go look at the trades for yesterday. So at the start of the night, yeah, we're sort of channeling down here, and we overshoot. And when you overshoot, it's always very, very scary to go short. And this traps a lot of people. So I just want to show you why this is a bad bar to go short on. So we've had the overshoot, so we're always expecting this range to form. So when this happens, I hope that you're drawing your little range in down to the low, and then you get that first pullback. So then you're watching it, you're watching the battle. And yeah, it does almost win, but this low never breaks this low. You see that? It creates a double bottom with that low. In fact, there's a triple test or triple bottom below there. So you want to see this bar here break this low. Once it breaks past that low strongly, then you put your limit order on back up there, and you hope it comes back and gets you filled in there. That's how you take that trade. You don't just jump in after it comes back down unless it breaks these lows strongly. That's what you're looking for. So it's like a first entry pullback, second entry short, and it fails, and then everyone gets trapped there on the overshoot, and that's exactly where you do not want to get trapped, because that traps so many people, and then it just shoots on up. So if you're smart, you would have taken this trade here. You jump in there, and you'll ride this trade up. If you miss that, you can jump in here. It gives you another opportunity to jump in, so you can clearly see that it's failed. It's a failed second entry short, and you've got bullish momentum. It's holding. It's not coming back. So you just imagine everyone's stops are here. Everyone's got their stops on there. Everyone's going short here. You've gone past all their stops. The tails usually are where people's stops are. You've broken through. They're all exiting, and you're entering. So you're going to get this huge momentum at the moment. You're going to head up. Everyone's trapped. So maybe you exit on the third push there. That's where I exited. And then you sort of break out of this green channel here. And then we head on up for strong bullish move, but it ends up too high, too close to this channel line here. So this was a micro channel line at the time for me, but I stretched it out once I saw it channeling there. But you just don't have the room there to get in. So if you wait for the next pullback down and you watch this little battle, so it's like it breaks out, it fails to break out, and then it really breaks out on that one, you just drop your limit order in, or you just buy at the market at that stage. And again, everyone else going short there on this move, like if they're taking a short trade back down there, they all got trapped again, and then it just heads on up again. So you can ride it all the way to the top of the range. You could also attempt to ride these up to the top of the range. We are in a trading range. It's a failed breakout. You can just hold. Then we get this pullback here, and you are waiting for a bull bar closing on its high, and you are looking for a follow-through bar here, and you do get a follow-through bar here. The problem with this bar is it's too far away from the EMA, and it's in that no man's land, and you have got a first entry long, second entry long there, but it ends up being a second entry long failure. Really what's happening, the mechanic behind this, if you look down on the other charts, you got this channel in here, and it's got a break, and it's just retesting the low, and then it's heading on up. And that happens over and over again. You have a channel, it breaks, retests low, heads out the other way. That happens on every time frame, constantly. So if you understand the mechanic of this, you'll understand why this is a bad trade. And one of the biggest reasons is it's not at the EMA. So if you just hold out for a bull bar at the EMA, or hold out for a gap bar. So this is the first bar to close below the EMA. It's a bearish bar in like 20 or so bars. So once you get a bar like this that closes below the EMA after 20 or so bars, and you've got a strong move to the left, that is a bullish signal as well. And you just wait for this to break the high of this, and you're going to probably go up, and you're probably going to retest this high here, at least retest this high, because this is such a strong move. Even though you're at the top of a channel here, like this, if this failed here, yeah, sure, it's going to head all the way down, but it didn't. The fact that it was able to, this EMA is holding means that we are trending. The EMA, see the rejection there? We are trending up. Rejection. It pushes through. So that's your better bar to go long on. Yeah, you're scalping it. You don't know. You're at the top of a trading range. It's very scary to buy at the tops of these trading range, but it did fail to go down. It failed to go down. It's heading up. So you take that trade to the highs. So you're probably exiting up here if you can get in. If you don't get in there, it's very risky to start going long here because you're into a triple test. So you can't really jump in at that point. But if you can get in there, you get that little scalp. Then you head on up, and it tries to go up, and it fails, and then it fails again. This failure is right into the EMA. You can go short here if you've got a wider stop. So if you've got a wider stop and you believe you're going to be heading down here, you've failed to break these highs, which does happen, and you're looking at the 15-minute, you can see the pullback is starting to occur. You can look, oh, maybe we're going to come back and touch the EMA on the 15-minute. You're going to do that pullback now, so you can look for that, and you can hold until you come down. The EMA on the 15-minute is about here, so you're looking to hold until you get down to around the EMA. So you can go short there, but you will need a wider stop if you start taking these bigger move trades. We're also in a bigger move. We're broken out of a bigger channel. More bars required for the reversal or the continuation. That's just how it works. We're in this bigger range here. More bars. So we start channeling down here. If you do go short there, you're holding. You're expecting us to head back. So maybe I should make that yellow there. You are holding. You need a wider stop at this point if you want to hold. You can't use scalpers stops for swing trades. It just doesn't work. The price will always come back. Price will always come back and get you if you try and use a scalper. Like if you were scalping here and you took this and you tried to hold for a swing at this point, watch what happens. It just comes back and knocks you out because your stop is there. But if you're swinging this and you got your stop all the way down here, like below this swing even, and you're swinging it up for that move, then you're safe. It's not going to come back and get you. But if you're trying to scalp and swing, it just will never work. It can work. That's not true. It does work, but you got to be really accurate where you enter. So we head on down, and again we fail. So we go first, try to go up once, we try to go up twice, and we get a failed second entry long there. So you can go short there. At this stage, you're just scalping because you can see the lows. So you got to be really, see how I always have these micro channels. So when I first see a pullback, I'm looking for those lows of that pullback. Where are the lows there? And I can see, oh yeah, there's a low to there. Oh, if I enter there, there's a low to there. So I'm always looking at the highs and the lows of what's happening. Then once we get to this point, I'll probably draw my fatter channel by this stage. So I'll be like, oh yeah, there's a few presses here. We're channeling. And then it tries to break out here. It looks quite strong. But you don't just want to jump in here. You want to wait till you get above the EMA, and then you want to wait for that follow through bar, and you just don't get it. There's no follow through there. So you can't go long there, and then it just fails again. And I took this trade. Once it failed again, it ended back up in this channel. I was expecting it to come down and definitely touch the EMA at that stage. The EMA was about there, so I exited about there. And then we pull back and we fail again, and we just head on down and we do this deeper pullback. So on the 15-minute, when you're watching this, you're seeing it like this. You're going, maybe I can go long there because we've had a break of this channel, but it just doesn't get the follow through bar. So you got your entry bar looks good. Your signal bar looks good. Your entry bar is okay, but the follow through bar is terrible. So you're exiting there. The follow through bar is just terrible. So if you're taking this on the 15-minute and you're scalping it, you're probably going to exit on that doji bar because you're not getting the follow-through bar. Anyway, you end up pulling back in. This bar looks great, but again, the follow-through, the entry bar is terrible. So signal bar, okay, entry bar, but is not good. So you got to wait. Ends up going back to the EMA again, that magical EMA. So just waiting for it to go back to the EMA, seeing it fail. That's a gap bar. It's the first bar to close below the EMA in not 20 bars, but 15 bars or so. How many bars? 1, 2, 3, 4, 5, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 bars, yeah. So 15 or 16 bars. So this is probably going to fail. You're probably going to get some push up there. And if you look at this, this is just the same pattern that we're always trading on the 3-minute and everything like that. It's just a longer version because it's on the 15-minute. So that is your entry. If this breaks above there, you're looking to go long there. That's a good entry, but you're only looking to break the highs really here. That's sort of, and you've got this other range in here, so you're not looking for this huge move at that point. But it's really important that you can see both. So have your bigger time frame up there so you understand you're in a pullback, and it'll make things more clear to you. And then you'll be able to see this move. So you see this move, you see these bull bars forming, you see it break the highs here, you just jump in and you just hold. If you do hold past the bar 100, you will get that move up to the purple, but it is a bit risky. I exited after 1 bar, I think, somewhere up here, 2 bars. And I was out once you start to see it sort of start to channel. Tried to go up once, tried to go up twice. So once it starts failing there, it's better just to exit because you probably are in a channel. Anyway, and you don't want the market to ever give something 2 attempts at something. If it fails twice, or if you look at it like it's tried to go down once, it's trying to go down again. Once it gets that second attempt to go down, yeah, it doesn't work, but it still heads back to the EMA. And then there's bar 100, and that's those are the trades.